Welcome to Keeping Up with Trends. This is Fed Razak, Senior Trading Strategist here at CMTrading, and we're joined with our host, Sergio Davids. What's on the list this earnings season?
Hey, Fred. So it's been a very good week for some of the world's biggest companies. We've seen Netflix do very well, part of the FANG group. Microsoft and Google earlier this week both beat earnings, and so has Meta. On today, on October 26th, we've got all eyes will be on Amazon. So probably headed for another good earnings. I mean, it has been, it was a bad year for them back in 2022, but they've since made huge strides for comeback. So yeah, I think shareholders and stockholders would be very happy with some of these major tech companies.
All right.
I mean, what are your thoughts on Amazon today?
So that's the question. I mean, in terms of consumer spending, I don't think that that's so much further down right now.
Yeah,
It seems that, the economy is hitting certain sectors over others. So, I mean, can it be that Amazon's going to show less revenue than it generally does? Maybe, but money doesn't disappear. Money just
right.
So I would expect it maybe to have less earnings, maybe higher profit margins, because people are going for less expensive items that may have higher profit margins. So it's just a cycle that the market has to go through. Stock is
Yeah,
still doing relatively okay. I mean, it's not, it hasn't been beaten up to the point that it's sold off from its highs from 145, but it's not beaten up to the point that it's, even where we were a year and a half ago when we
yeah.
anticipated
No, that
so
was
much
bad.
worse.
It was very bad for them. And yet for the last three quarters, they've beaten their earnings. And that's, despite of high interest rates. So I find that quite surprising. I mean, considering they're very much a commercial, you know,
I'm
brand,
saying,
well, commercial retail brand.
so that's exactly the trick by consumer spending. When we get into a point or a place of consumer spending, that becomes then another calculation.
Okay, makes sense. So, speaking of making sense, a couple of our listeners, hit us up on social media and asked us some questions regarding, earnings season. So I thought it would be fun to go through some of their questions and, help out some of our traders out there. So let me shoot some questions your way, and yeah, we'll take it from there. So, first question is, what is earnings season and why is it important for traders and investors?
So under the regulatory FINRA rules, which is the financial regulatory body in the United States, a company needs to uh, publicize their quarterly every 4 quarters, and they decide which quarters they are. It doesn't have to be from December to March and March to June. Each company has their own quarterly basis. And they publicize what they did, how much sales they had that previous 3 months, what's their profit margin, etc. So that there's some transparency from public investors to the company to see exactly what their books were. I mean, because the public is investing in these type of corporations, the regulatory body feel and set as a standard that since the public is putting money into these companies, that they
Right.
should have the right to protect them, that they should have the right to see what the books are, right?
Makes
So
sense.
that's why they do it, and that's why they publish these quarterly earning reports.
Cool. So, one of our questions also was how often does it occur? But I mean, I'll take it from there. It's pretty much each quarter. Although I will just say that, sometimes it's not often, but they'll change the date as to when they're going to be releasing, and companies will report different quarters to others,
Right.
which,
So,
yeah,
like I said, the corporations decide where and when they're going to, publish those quarterly earning reports. But they're pretty much There's usually a consistency to
Yeah.
that. It's not it varies a day or a few couple of weeks, but not more than that.
So next question is, what are some of the factors that can affect companies' stocks during earnings season?
Okay, so the clear one is really sales, right? I mean,
Right.
that's the growth mechanism by which a company grows through, is the amount of sales that they produce, right? So if the anticipated sales goes up or down, then investors are either attracted to it or detracted to that particular company to
Yeah.
invest in it. And then investors can then, make their arrangements whether or not to continue investing or to sell out the stock. So um, it's a transparency, really. I mean, it's really a tool of transparency, but you really need to know how to read a balance statement to understand what these numbers mean. An income
Yeah.
statement, a balance statement, because there's a lot of accounting creativity, I call it.
Okay, sure. Makes sense. Next question is, what are some common strategies that traders can use during earnings season?
What are common?
Strategies that traders can use during earnings season.
So it's really it's first of all, my motto: never go into
I
a
was about to
position.
say, you like to see, after the fact which way the trend is going.
Right. I mean, like, we're not prophets, right? I mean,
Sure.
as long at least I know I'm not a prophet. I don't know. Can anybody talk for themselves? That's another story. But
I think there's a lot of would-be prophets out there.
well, maybe they should trade the stock market then.
What? Psychic wins lottery. I'll wait
um,
until I see that headline.
yeah. So then, yeah, that person won't need to work a very long time, right? So this is the thing, like we've mentioned this in the past, where a stock comes out and meets its sales targets and meets its profit targets, and then it goes down right after earnings. Right? We saw that with
Mhm.
Nvidia, or they blow away their earning expectations, right? And then the market goes down, or vice versa. They miss
Yeah.
and the stock goes up. So there's a lot of things that are happening behind the numbers. And what I mean by that is that there's some things, like, if anybody has ever worked in sales, they know that there are certain sales that are in the pipeline, right? That they haven't actually committed to purchasing the official document of a purchase order, but they know that there are sales in the pipeline, that this company is going to be making XYZ in the next guidance or this and that. So as important as it is to hear what the numbers are coming out with, it's equally important to understand when the CEO goes on Squawk Box or one of these CNBCs or one of these forums and discusses their guidance moving forward.
Mm.
Because again, they have to be transparent, and if they're not, they get sued for it. They get penalized for it.
Okay. Fair enough. So, and I think this is a good follow up, how do earnings season affect market volatility?
Oh, so they're really a confirmation to the market. It's like, you could play the technicals all you want, but you can't completely be honest with the technicals sometimes without having a direction of, let's see the numbers. I mean, it's like a report card, right? Your kid
Yeah,
gets a report card and you pretty much know where the kid is holding, in
sure.
terms of their academic standing, and what they need to improve, or what they need to kind of change direction from. So if there are, especially if there are any surprises, right? So
Right.
generally, when a company comes and possibly misses in a very big number their quarterly earning report, in fact, before they actually publish the number, they'll halt the stock, meaning they'll they won't allow any trading in the stock. The actual exchange, whether it's New York Stock Exchange, the Nasdaq, would actually kind of freeze it. It's called halting the stock, and then the information comes out, and then they open up the availability to trade the stock, and that is supposed to kind of like protect the company from going to zero. And this was a big deal in, for example, 2008, or the bubble of 2001, 2000, um, of the internet bubble, and the credit crunch crisis in 2008. Many companies, were in this type of environment, that they just, found themselves having to be halted. I mean, if you remember, what was that company called? The financial one that went down. Um, Word
Been
doesn't
a
come.
few.
Yeah, no, but there was one really big one. Not Merrill Lynch, not Dean Winter. Uh,
Lehman Brothers.
Lehman, yeah, Lehman Brothers. That was the one. So they got halted a couple of times before. Remember, Lehman went bust,
Yeah,
right? It
that
was a
was a
hundred
big.
and
It was
something dollar
huge.
stock.
But I wouldn't it be fair to say with Lehman Brothers, it was one of those too big to fail situations, and then look what happened.
Well, I mean, they
Because we,
they did overextend themselves, in this bad credit secondary market. But ultimately, this didn't just go overnight. This happened for about, you know, I would say a year to a year and a half before they just, I mean, really collapsed
yeah,
when they closed the doors. So that is an indication of something that could go awry in a company in a very short period of time.
mm, sure. And finally, I think I'll just change the wording here because it's how can I make money during earning seasons? Obviously, there's a lot of traders looking, you know, to cash in
So
on earning season.
So we used to have a lot of guys trade the aftermarket hours, which were mostly based on volatility, not
Right.
based on reason, not based on technicals, nothing, just volatility and market action. Like if they saw something going up, they'll do that, or they'll wait until it stops and then they take the opposite direction, whether it was up or down,
Right.
because so there's that market to trade. But really, the next day still provides you, with tremendous opportunity to continue trading that particular. I mean, especially since we've been on intervals that we haven't seen in a long time.
Yeah.
Amazon is over $121 a share. So if it's going to continue selling off, it still has way to go. Between now and the next quarter.
Yeah.
So that's that is, generally speaking, there is multiple opportunities to trade afterwards. I mean, even the day after, I would say, take a break from it. But
Yeah. It could be even a few days.
right,
I mean, we've seen
until
that
until
happen with
things
half the
kind of
company
settle
earnings.
down.
Yeah.
Right, until things kind of settle down, and then you're able to look at it.
Okay. And yeah, I guess finally, any advice for traders out there who are still on the fence about whether or not they should actually, sign up and start trading?
Well, I mean, you lose nothing by becoming gaining wisdom and learning about the markets. My answer to people who are sitting by the sidelines is that educate yourself, take the time.
Yep.
It doesn't have to be from today to tomorrow, but make yourself a plan on what you need to do in order to develop um, those needs to be able to trade the financial markets. Because ostensibly, sitting on the side and leaving money in, you know, I always believe be responsible. That doesn't mean
Yeah.
selling your house and putting all the money in the markets, but at the same time, if you're not in it, you can't win it. So,
Yeah. You're just
uh,
watching opportunities pass you by. And
right.
I think,
So,
I
yeah.
think a lot of people also forget that, what with any skill, I mean, trading is a skill, it requires knowledge and experience. The more you learn, the easier it'll get. And the more you trade, the more, experience you'll get to make better trades. It's not a once off get rich scheme, you know?
I Yeah, I'm
I
not a
think,
big believer in get rich schemes. I'm a
yeah,
believer in, you make incremental um added value movements in your life that then bring you to maturity somewhere in your 50s or 60s. That is just an accumulation of your life's failed attempts and successful attempts.
awesome. I think on that note, I'll leave it there. Thank you so much, Fred, for all your awesome trading advice.
My pleasure, Sergio.
Awesome, and I'll see you on the next one.
You got it. Thank you.
Goodbye.